If you own a property in Toronto or you're thinking about buying, you need to understand how property taxes work. So in this video, I'll break down how they're calculated, what MPAC assessments are, and why they matter to you. Starting from the top, let's discuss how taxes are calculated. In Toronto, property taxes are based on your home's value, and it's the Municipal Property Assessment Corporation, MPAC, that assigns this. MPAC assesses properties across Ontario and assigns a current value assessment, which is based on factors like recent sales of similar properties, your home's size, age, and condition, the location and neighborhood trends, and any renovations or upgrades you've made. These assessments are typically conducted every 4 years. In some instances, homeowners might think their property was overassessed, and if you feel this way, you can appeal. If your assessment seems too high, you have until March 31st of the following year to request a reconsideration from MPAC, and this is totally free. Pro tip, check what similar homes in your area are assessed at, and if yours is way off, you might have a case to lower your taxes. Once MPAC sets your home's value, the City of Toronto applies a property tax rate to determine what you owe. Compared to other major Canadian cities, Toronto's property tax rate is actually quite low. But that doesn't mean that your bill is small, because Toronto homes tend to be higher in value, which results in significant taxes. The tax rate is based upon the amount of revenue that the city needs to fund services and can change based on city budget adjustments, provincial funding, and special levies. As a very simple example, if the city determines it needs $100,000 and the total assessment base is $10 million, meaning that the value of all homes adds up to $10 million, they will take the total amount needed, $100,000, divide that by the assessment base, $10 million, and that will result in a tax rate of 1%. What this also means is that if the budget were to remain the same and yet values go up, thereby increasing the assessment base, the tax rate would actually come down. So don't assume that every time your value goes up that your taxes will too, as it all depends on the amount of funds the city needs. So now let's apply this rate to determine how much tax a homeowner would owe. Using the simple example from before, if the rate was 1% and your home was valued at $1 million, your annual taxes would be $10,000. Understanding your property taxes and MPAC assessment can help you plan your budget, appeal unfair assessments, and make smarter real estate decisions. If you're thinking about buying in Toronto and you have any questions, I'd love to help.